In this video, traders, we're going to look at why fading a grinding trend is just one of the worst trades you can do. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. Okay, if you are subscribed, appreciate your support. If you're not, hit the subscribe button, hit the bell, all that kind of stuff. You want to be notified, you can hit the bell. You can see, is that something I want to look at? Yes, or swipe no, no problem at all. Right, so this is a real big one, guys. And okay, I'm talking not only from an intraday perspective, but also from a swing trader's perspective. Let's look at the swing trader's perspective first. How many traders have tried to fade a grinding trend and have been run over massively? Now I'm doing this video as I speak. The Dow is grinding. And you know, many people I see on kind of on Twitter or whatever it may be, you know, they're trying to fade, they're getting stopped, they're trying to fade, they're getting stopped. And we see this time and time again. So there's reasons why it's such a bad idea, guys. First of all, the obvious one is if it's a trend, the trend is your friend until the bend at the end, is that big saying. And yeah, everyone goes, right, fine, fair enough. But in the circumstance where a trade is just purely grinding, and by the way, I mean grinding like literally, you know, from an intraday perspective, you've got this chug, 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 little tiny tick, chug, 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 chug. You know, if you're showing the swing trading perspective, you know, to the upside, you'd have candle, 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 just this grind, grind, grind. And people try to fade it and get run over. Now, there's reasons why. One is obviously the momentum of the trade, but why does it make it a bad trade? It doesn't necessarily make a bad trade being counter trend, right? No, it doesn't, but it's under certain conditions where counter trend works well. So grinding trade like this, you don't know where it's going to end. That's the point. All you're doing is literally stabbing in the dark. And when it's, let's say, intraday and it's grinding like this, then your ATR calculations go out the window. If you expect to do a 200-point range, you can throw it out the window because we're in a different scenario, a 1 out of kind of 70-day scenario where you've got a grinding trend. Same in the market, the market's grinding up. You're just trying to guess where the end is. Oh, I think it's gone up 5 days, you know, I'm gonna go short. Oh, 8 days I'm gonna go short. Well, what happens if it goes up 20 days? You know, how can you manage the risk? So risk management is the first thing. Very difficult to manage the risk on it. It's very difficult to know where to put your stop loss, where to kind of get out of the trade if you're wrong. And by the very nature of the trade, the further it goes, the more you want to be in it. Because if your thesis has gone too far, then it goes further and further and further and further. Then your thesis is, well, it's really gone too far now. I really must want to buy it because it's down so much. It's down 500 now, it's down 600 now. You've got no place to manage risk. The key to good trade ideas, guys, is to know where you can get out as cheaply as possible. So how do you deal with this? So the first thing is, guys, the trend can go on for longer than you ever think. Intraday as well. I've seen intraday. Obviously, I've seen loads of intraday trends that have gone on way longer. I've seen flash crashes. I've seen grinding trend days that have just carried on aggressively all day long. There's just times when you just need to let it do its thing and then look at the second thing it does. So intraday, swing trading, same thing. You can't quantify the risk. The trick, in my opinion, or that's why this is my opinion, guys, as well, I think this is the worst trade to do, is to wait for what happens after the reaction. There will be a reaction, okay? Then you can choose what to do. And that's where the beauty comes in. And see so many traders, they're trying to buy this, they get hammered, and they're not there, they're not around, they're not lively, not prepared for the next setup, which is the best setup of the lot most of the time. You know, it's same with the swing trading. This is exactly the same thing. So that's, at some point, you're going to get counter trend move. Okay, whether that's on the day 2, day 3, whether you're looking at swing trading on you know, week 2, whatever, you're going to get a counter trend move. So now, great, now we can start to look at it. We can go, right, do we want to sell, in this example here, for a new low? Right, that's one thing we could do. If we do want to still trade counter trend, and finally we have a level to work off. Let's go over here. Let's imagine this chart is over here now, guys. So there's our chart, grinding up. It's coming down, going back up. If we still want to trade counter trend, then at least we've got something to work off and manage your risk off, right? The high that it's put in on phase 1. So now we know we can either wait for it to go back up and come back through, go to high, say, come back, there's our stop, going to be right above that high, very nice, or we sell it straight away on there and we have a fixed level above again, but we've got a level to work off. When we're just fading a grinding trend, we have no idea where the stop could be. We're just literally plucking a figure out of the air. We're going, oh, you know, 100 points, 50 points, 20 points. And the very nature of it as well, it's grinding, grinding, grinding. Again, all time frames you see this, it kind of lulls you into a false sense of security. So you're going short on that swing trade. Maybe it starts to come down the next day, maybe it gaps up a little bit and just kind of tickles and tickles and tickles, and it comes down a little bit more, then it gaps up a little bit, and it just eventually just gets you to a point where you have to kind of get rid of it. And we see this kind of some big hedge fund managers as well, guys, you know, being stubborn short on something, and it's slightly different, of course, because they've got bigger money to move around and they can stomach that. But for us traders, you know, the very best trades are always when we can express it with a level to get out. You know, I'm a firm believer in that, regardless of whether you're trading counter trend, regardless of whether you're trading with the trend, whatever you trade you're doing, if you cannot express the trade with a very sensible position where you're exiting it, if it doesn't go your way, then there's no point in doing it. And I think that's such a key part. The amount of times I'll look at a chart and go, I think that's going, I'm pretty sure that market's going to hit there. I can't, I've got nowhere to put my stop. You know, it's like even sometimes following the trend. Talking about intraday perspective, sometimes it's like, well, I think we're going to keep going and maybe hit this, you know, prior day's low or 20-day low, whatever it may be. But I can't start shorting it into lows here because, you know, what if it pops up kind of 40 ticks or so? I have to stomach that. It's still a valid short. So again, it becomes a point, you know, if you're kind of moving slightly onto this, it becomes a point of where can I look for my stop? So the easy thing to do, guys, if you feel like you want to get stuck into this and sucked into it, and I know that sometimes it is too high, look, the chances are most of the time it will counter trend. Maybe it'll fade at some point. But until you have first level put in, then you don't touch it. It's a nice rule to have. Let it put in a decent high and put in a decent pullback, and then look at it and assess it. And if you still want to trade counter trend, you're looking for something like this. If you want to trade with the first pullback with the trend, then by all means do that. So it's literally waiting for it to go through that first cycle of exuberance, of extension, of stretch. See how far it can be stretched. And then you're looking at it through a different lens. You're looking at it through a lens of, well, the further it's stretched without a pullback, the better the trade is going to be when I get my hands on it and I wait for that second phase, whether we're pulling back and breaking through, whether we're doing a fake out or whatever it may be. So be careful of that, guys. I think it's one of the worst trades you can do, fading a grinding trend without waiting for something to happen first. Now listen, it's my opinion. There might be someone out there watching this who makes serious money by fading grinding trends, and I'd love to hear how you do it. I'd be interested to hear your strategy around that. But I think unless you can quantify that risk, it just becomes something that's very, very difficult and very, very awkward to trade, when you can just wait for the next cycle and things become a lot clearer. And even then you might not want to trade it, but at least it's become a bit clearer, some levels you've got. All right guys, take care, see you next one. Keep your risk managed, whatever you do. Bye bye.